Good morning, ladies and gentlemen, and welcome to the WOODBOIS investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give your attention to that, we'd be most grateful. And I'd now like to hand over to Paul Dolan, CEO of WOODBOIS. Good morning, Paul.
Morning, Mark, and thank you, and good morning and welcome everyone. Thanks for taking the time to join the WOODBOIS investor presentation. 2020 has been a transformational year for us as a business, and we're looking forward to a very strong 2021. I'm going to start by giving you a quick overview of the company. I know some of you won't be familiar with us. I'll use the latest investor presentation, which is up on the screen now. Hopefully you can see that. This presentation can also be found on the investors section of our website. I'm going to keep the presentation brief as it's an introductory call, and then we'll finish with some Q&A at the end. Now, before I begin, let me tell you the key takeaways from this presentation. Number one, WOODBOIS is a rapidly growing company in a structurally important global industry. We've got a clear vision to increase our revenues by 20 times over the next 5 years. Secondly, sustainable forest management and ESG is absolutely fundamental and at the core of what we do as a company at WOODBOIS. The Zoological Society of London ranked WOODBOIS third in the world in its spot assessment for the global timber and pulp industries in 2020. Big validation for us. Thirdly, we intend to be disruptive in this space. My personal background is applying trading technology to financial markets. Now, in-house, we've built and will continue to build technology to give us insight into the global hardwood market, which is pretty opaque, is old-fashioned, and it's not represented on any global exchange. And then fourthly, and I think extremely importantly for investors, management is aligned with our investors. We're actually on the hook, and we need to deliver $35 million in EBITDA to shareholders over the next 3 years if management is going to fully benefit from the options award that was set out this year. So being 2020, of course, we need to mention COVID. It's been a challenging year from that standpoint, but it's also been a transformational year for us. We successfully carried out a balance sheet restructuring. We've removed very high levels of debt from the business, and we raised capital at the same time. We've assembled a very strong team. We've never been in better shape and better place to execute what's a really aggressive growth objective, I think, for that we've set out for the business. So, second slide, I'd like to draw your attention to the disclaimer on this page, and suggest that you read it when you have a moment. Slide 3. For those of you who are new to the company, this is an introductory slide highlighting that the $4 billion African timber space is very fragmented, and that we see a consolidation and leadership opportunity for a player that has access to capital and a willingness to develop and deploy technology. WOODBOIS is increasingly well equipped to become that player. The fundamental pillar in achieving a leadership position in this market is the sustainability of our operations. So I'll explain as we go through the slide how the way that we harvest trees in natural African forests actually combats deforestation and generates high levels of positive social impact. Since coming into the company in 2017, I've overseen a comprehensive turnaround. We have 400,000 hectares, which is almost 1 million acres, of 20 to 50-year forestry concessions, which are difficult to acquire. And these are valued on our balance sheet at $117 million net of deferred tax. The concessions are important as they give us security of supply of our raw material. for our principal activities of producing sawn lumber, which you see a picture of on the bottom right of the slide, and veneers, which are used for the manufacture of plywood. $8 million of capex has been invested in our production facilities in Gabon over the last couple of years, and we've grown revenues from $600,000 in 2016, which is the year that I arrived, to $8 million in 2017, 13 million in 2018, and just shy of $20 million in 2019. Now, clearly with COVID this year, we've had a hiccup, but I feel we've used the time wisely and productively, and we're now positioned to resume that rapid growth trajectory that we've seen over the last few years. I've invested more than $2 million in the company personally to date, and the directors in total hold around 11% of the company. So we're all highly incentivized to generate positive cash flow from these assets, and that's absolutely what we're focused on. So this next slide has got a simple pictogram of the flow of our activities from the forest on the left-hand side, where you see the picture of the tree, via our processing facilities in the middle, and then across to customers on the right-hand side. So the $8 million of capex that I previously mentioned has gone into those things in the middle, the middle section, the kilns to dry timber, the sawmilling equipment, the equipment at the veneer factory, and that means that significant operational leverage exists within the business today. So I've used that sawn log that you see on the right-hand side of this slide to illustrate the cost of production and how we arrive at a mid-30s% margin for sawn timber. For veneers, because you recover a larger percentage of the log, the margins are actually higher. So the next couple of slides where we talk about the sustainability of our business, this is something that you will hear me talk about. Our commitment to sustainability. You'll hear that with a lot of frequency because it really is at the heart of what we're doing. So these two slides take you through some of the practices that are in place and some of the key takeaways that hopefully highlight to you the renewable nature of the forestry assets that we manage. So you can see on the right-hand side of this slide, in 2019, in each hectare that we were harvesting in, we took out around one tree, and of the trees that we took out, they've got to be a certain diameter, so a certain age. We're one of the biggest formal employers in Wheeler, which is the town that we operate close to in Gabon. And we're providing quite specialised and skilled manufacturing jobs in what's predominantly a raw material exporting country. So I go a little bit deeper into this in the following slide, where you'll see an actual management plan on the left-hand side for 3,500 hectares. So the year before that we go in and commence operations in a section of forest, we send people in with GPS to actually record and locate all of the trees that we're interested in taking out. And then on the bottom right-hand side, you'll see the dots represent the number of trees in a particular hectare. If you think of a hectare as a rugby pitch, for example, there are somewhere between 500 and 1,000 trees, typically in each of those hectares. Our management plans allow us to take out 5 to 6 trees, possibly as many as 7 out of that 500 to 1,000 trees. Now, you can see that's incredibly low impact logging. Now, when we come out of that area, we can't go back in there again for 20 years. So for every one tree that we take out, 6 to 7 trees come up through the canopy. And that's what's called continuous cover forestry. So adhering to these plans is what keeps the forest intact and future-proofs the business. And of course, when you look at the devastation of forests in Brazil, Australia, California. We all see these things on our TV screens. The direction of travel of the importance of practicing sustainable harvesting in order to protect these valuable assets, I think, becomes very obvious. So this is the on the left hand side. You see the spot report that we came third in this year. 2019. Last year was the first year where we were big enough to appear in this report, and we got a call out of the blue from the Zoological Society of London informing us that we would be in it. We came seventh in 2019, and as I say, we came third this year. And I think this really demonstrates our commitment to best practice and transparency when it comes to the provenance of our raw material, which is increasingly important, and how we manage our people and our operations. I think another interesting thing about this table, if you look at it, all of the other companies that appeared in the top 20 of this report that are actually listed all have a market cap of more than $1 billion. Clearly, we don't right now, and that's a gap to close. But I think what it illustrates is that we punch well above our weight. And again, in terms of the global focus by governments and investors on ESG, we feel that highly ranked companies will become the go-to partners and providers for governments and consumers at large. If you're interested to read more about what we do on the sustainability front, you'll also find on our website our sustainability reports for the last 2 years, which you see on the right-hand side of this slide. These charts I think are interesting. Timber is an organic commodity. It's clearly unrivaled in its use within the construction industry, and given that global population growth, given the levels of global population growth, it's pretty clear that demand for timber products is set to increase, and possibly very rapidly. If you think about just Africa alone, where the population is expected to double to 2.5 billion people by 2050, it's clear what the direction of travel is, and that there's going to be huge demand for timber, because clearly people need homes, and cities are growing very, very fast. So on the top chart here, you'll see that we derive more than 5% of current revenues from only 1 out of 9 of the world's biggest importing countries. So there's clearly huge untapped potential for us to be exporting and servicing those economies that are already importing a lot of timber. And then the bottom chart, I think it's really interesting to see just how fast timber imports are growing in developing countries. I was staggered earlier this year when I found out that Jamaica actually has of timber a year now. It's not all hardwood, but there's clearly all of these markets are growing fast, and are areas that we can service. So our growth is underpinned, I think, by accessing the big importing countries in the top graph, as well as the rapid growth frontier and emerging markets in the bottom graph. So the summary slide, I thought I'd close on a summary slide of where we sit to date and recap some of the key points. As I said at the beginning, we're a rapidly growing company in what is clearly a structurally important sector, targeting 20 times revenue growth in the next 5 years. Management are closely aligned with investors. The management team's options aren't triggered unless we achieve high levels of EBITDA in the coming years. There is a slide on the leadership team in the appendix if you want to look at that. We see ourselves very much as a digital disruptor in an old-fashioned and really quite archaic market. ESG and sustainable forest management is absolutely fundamental within our DNA. We intend to become the market leader because there's simply there isn't one that exists. If you think about other commodities, I'm sure you'd be able to mention market leaders, but in this industry there simply isn't one, and that's why we intend to become that leader. Firstly, in the $4 billion African hardwood space, and in future the $40 billion global hardwood space. So on that note, I think now it's time to move on to the Q&A portion of the presentation.
That's brilliant, Paul. Thank you very, very much indeed. Just, Paul, while I give you a few moments to look at the Q&A, I'd like to remind investors that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. And I would ask you also if you feel free to continue to submit your questions using the Q&A tab that's situated on the right-hand corner of your screen. Immediately after this presentation, you'll be redirected also for the ability to give your feedback to the company in order that they can better understand your views and expectations. And investor feedback is incredibly important, and would highly request that you can provide the company with your views and expectations. Paul, enough of my waffling. Investors had the ability to pre-submit questions. I think we had a couple that were pre-submitted, and then perhaps I could address those and then ask you to look at the live Q&A and read out the question perhaps and who it's from, where it's appropriate to do so. The first question that we had was, there is a big disconnect between the market cap and the net assets on the balance sheet. How do you look to close this?
Yeah, so it's a really good question. It was the first thing when I came into the company and when I was looking at investing in the company that kind of caught my attention and made me want to get involved in this in the first place. And to me, the answer is clear. We've got to prove profitability, and we've got to show the market what the company's cash flow potential is. And I think as soon as the market realizes that these assets on the balance sheet are actually cash cows, I think we can expect this disconnect to close.
That's very kind, thank you. The other question that was submitted was, what are the key drivers to continue to increase profit margins and output from the existing capital base?
Yeah, I mean, look, really, another really good question, and of course, something that we obsess about. And look, my general kind of management philosophy is, if you can't measure it, you can't improve it. So we kind of obsessively measure everything. But there are several drivers here for us. So the biggest driver is operational leverage. Fully utilizing the capacity that we've got available is going to clearly drive margin expansion. So that's the first thing. And then the second thing, once we're at capacity, I think identifying operational efficiencies that can be made within the production process. So in other words, applying lean management style techniques, which I don't think are that common in this sector. Clearly those can further improve our margins. And then I think another thing that we can do is, and we're looking at doing, is moving further along the value chain without increasing the capital base. So we're constantly examining and researching products and markets that we can create and that we can service really with marginal additional investment.
Okay, well, thank you very much indeed, Paul. If I could ask you to click on the Q&A tab, Paul, you'll see there's a number of questions that have been submitted. If I could ask you just to read out those questions and then perhaps give a response if it's appropriate to do so. And then once we take care of those questions, I will take the floor back and address you to wrap up if that's possible.
Thanks, Mark. Yeah, I've got them open. I've got two questions from Nick J. So I'll take each of those in turn. The first one was, what are the plans regarding future capex? So future capex, we've already set out that we want to increase our veneer line in Gabon. So that's probably the biggest thing that we've got outstanding at the moment. And then when I talk about moving further along the value chain, At the moment, we create quite a lot of waste. In the sawn product, we're probably recovering around 40% of the log. Now, we want to get that up to 50%, and then after that, there are lots of other things that we can do with our waste, whether it's sawdust or whether it's offcuts. So we may spend some capex on, I suppose, machinery that will allow us to create things from what is currently waste. So we'd have effectively zero input cost for other products. And I'll give you an example, Nick. One would be block board. So if you can imagine taking a bunch of offcuts and gluing them all together, and then putting a veneer sheet over the front and the back, and then just cutting it to the size, that becomes a door for the African market. So it's those sorts of things that we're also looking at. The other question that Nick had was, how do you win or acquire a forestry concession, and how competitive is the process? So I suppose each country in Africa will have its own process. But typically, the management plans that have to be submitted and adhered to are actually often along the lines of what's expected for FSC certification. So they're really quite rigorous, and it is a painstaking process. And certainly, a lot of the suppliers that we work with, we know they've taken many years to go through the process of acquiring these concessions. So I suppose it's different in different countries, but it's always a rigorous process, and very time consuming. And I think the other thing to point out is, in most of the African countries, I would say pretty much everything around the Congo Basin now, there are no new concessions. So I think that will probably drive the value of these concessions, and clearly there is, or there can be, a secondary market in them. But as you can imagine, if I go back and kind of show you this slide, the import value by country, and you see how much, as a percentage of the global market, China really does hoover up. You can imagine how active Chinese players are in wanting to get concessions across Africa, in the same way as we've seen them look to hoover up, all sorts of other commodities on the continent. So I hope that answers the question. The next question is from Abby. Hi, Abby. How you scale to increase your export capabilities to new territories, and how will this affect your cost? Well, so if we take 2019 as an example, 2020 won't be that different. We actually exported to 40 different countries, and we have a very nice geographical split between them, in terms of continents. So to the Far East, to the US, some to South America or Central America, North Africa, Middle East, and Europe are all represented there. So in terms of scaling up further, yes, we will want more people, and we've made an announcement about one, I think really quite brilliant person that joined us the week before last. So in terms of how it affects our costs, I think it's fairly marginal in terms of how we deploy technology to bind the team together wherever they are in the world, and everyone working off the same system. Yes, there'll be some additional fixed cost in extra people, but I think for every person that we take on, they will pay for themselves many times over. The next question is from Graham. Can you tell us a little bit about your main shareholders apart from management, and why they invested? So we do have a couple of very large institutional investors, which you can see again on the investor section of our website. And why were they attracted to the company, and why did they invest? I think probably several reasons. One of them definitely would, I think, be our incredibly strong ESG credentials. As I said previously, for a small company, I think we really do punch above our weight in this respect. And the other is that we are rapidly growing, and I think it's not always easy to find growth. So I think that was something else. I think in terms of the strength of the board and the people we have within the business, clearly they've looked at our backgrounds and what we've achieved in the past, and that's I'm sure influenced their decision as well.
Paul, I think that that probably takes care of the questions that we have received. I don't think you've missed any there. Perhaps, and if any other questions do come in, Paul, between now and when we wrap up, obviously I'll make them available to you on your dashboard. But in light of no further questions, perhaps I could just ask you to wrap up. And I know investor feedback is important to you, and I will redirect investors to provide you feedback.
Yeah. Okay. Look. Thanks, Mark. And it's the first time that I've used this platform. It's really interesting, from my point of view, and important, of course, to engage with investors. So, hats off to Investor Meets Company for providing this kind of forum. I think it's tremendous benefit actually to us as a company, and hopefully to investors as well to be able to have this dialogue. So really just thank you very much, everyone, for attending, and do feel free to be in touch with us and fire in questions or comments that you have.
That's brilliant. Thank you very much indeed, Paul, and thank you for updating investors today. Could I ask investors please not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our platform, then the feedback page will appear. And if you access this via the link sent you by email, you'll simply be asked to log in to submit your feedback. And it is incredibly valuable to the company to understand the views and expectations from your good selves. On behalf of the management team of WOODBOIS, I'd like to thank you very much for attending today's presentation. That now concludes today's session. Good morning to you all. Thank you once again.